Hello everyone, today we're going to learn about Company Act 2016. First is about auditor statements, which is fall under sections 261 subsection 1, which is signed by the auditor of the companies. Section 261 subsection 1a stating whether the company has in his opinion keep proper accounting record and other book during the period covered by those accounts. Section 261 subsection 1b stating whether the financial statements have been audited according to standard, and Section 261 subsection 1c stating whether the auditor reports on financial statement was met subject to any qualification or opinion under any applicable auditing standard or include any comment made under subsections 266 subsection 3, and if so, particulars of the qualification or comments. Lastly, Section 261 subsection 1d stating whether as the date to which the financial statement has been made up, the company appear to have been able to meet its liability as and when the liability fall due. The company and every official who break this section commit an offence and shall on convictions be liable to fine not exceeding 20,000 ringgit, and in the case of continuing offence, to a further fine not exceeding 1,000 ringgit for each day during which the offence continue after convictions. Next is company auditor to be approved by minister charged with responsibility for finance, which is fall under sections 263 subsection 1. Any person may apply to the minister charged with the responsibility for finance to be approved as well company auditor for the purpose of this act. Sections 263 subsection 2. The minister may, if he is satisfied that the applicant is of good character and competent to perform the duties of an auditor under this act, upon payment of the prescribed fee, approve the applicant as a company auditor. Section 263 subsection 3. Any approval granted by the minister under subsection 2 may be made subject to such limitations or conditions as he thinks fit and may be revoked at any time by him by the service of a notice of revocation on the approved persons. Section 263 subsection 4. Every approval under this section, including a renewal of approval of a company auditor, shall be enforced for a period of 2 years after the date of issue unless sooner revoked by the minister. Section 263 subsection 5. The minister may delegate all or any of his powers under this section to any persons or body or person charged with responsibility for the registration or control of accountant in Malaysia. Section 263 subsection 6. Any person who is aggrieved with any decision of minister or with the decision of any person or body of person to whom such minister has delegated all or any of his power under this section may appeal to the court. Sections 263 subsection 7. For the purpose of this section, person mean a chartered accountant as defined under the Accountant Act 1967. Next is company auditor, which is fall under sections 264 subsection 1, which is that a firm of auditors shall not knowingly consent to be appointed and shall not knowingly act as an auditor for any company and shall not prepare for or on behalf of a company any report required by this act to be prepared by an approved company auditor unless. The next is power and duty of auditor, which is fall under sections 266 subsection 1, which state that every auditor of a company shall report to the member of the financial statement and on the company accounting and other records relating to those financial statements, and if is it a holding company for which consolidated financial statements are prepared shall also report to the member of the consolidated financial statement. Fixing of auditor remunerations, which is fall under sections 274 subsection 1, which state that the remuneration of auditor appointed by the member of a company shall be fixed by the member by ordinary resolution or in such manner as the member may determine by the board, shall be fixed by the board, and if it not so fixed by the company or by the registrar, shall be fixed either by the registrar or board, and if not so fixed by the company. In this section, remuneration includes sum paid in respect of expenses and payment otherwise than cash. Resignation of auditor, which is fall under sections 281 subsection 1. An auditor of a company may resign his office by giving a notice in writing to that effect to the company at its registrar office. Sections 281 subsection 2. A notice of resignation under subsection 1 shall bring the auditor term of office to an end after 21 days from which the notice is given or from the date as may be specified in the notice. Notice of resignations of auditor to registrar, which is fall under sections 282 subsection 1, that where an auditor resigns his office, the company shall send a copy of the notice to the registrar within 7 days from the receiving of a notice of resignations. Sections 282 subsection 2. The company and every officer who contravenes these sections commit an offense. Right of resigning auditors of a public company, which fall under section 283 subsection 2. The auditor may give the notice of resignation referred to sections 281 together with a signed requisitions calling on the directors of the company to immediately convene a general meeting of the company for the purpose of receiving and considering the explanation of the circumstances connected with his resignation as he may wish to place before the meeting. Appointment of auditor of private company, which falls under sections 267 subsection 1, that a private company shall appoint an auditor for each financial year of the company. Appointment of auditor of private company, which falls under sections 267 subsection 1, that a private company shall appoint an auditor for each financial year of the company. Section 267 subsection 2 said that notwithstanding subsection 1, the registrar shall have the power to exempt any private company from the requirements that in the subsection according to the condition as determined by the registrar. Next is appointment of the auditors of the public company, which is fall under section 271 subsection 1. An auditor of public company shall be appointed for each financial year of the company. Section 7(1) subsection 2. Notwithstanding subsection 1, the board shall appoint an auditor. Section 7(1)(2)(a) at any time before the first annual general meeting of the company or to fill casual vacancy in the office of the auditor. Resolution to remove auditor from office fall under section 276 subsection 1. The member of a company may remove an auditor from office at any time, first by ordinary resolution at a general meeting, and lastly is according with section 277. Lastly, special notice required for resolution to remove auditor from office, which fall under 277 subsection 1. state that a special notice shall be required for a resolution to remove an auditor from office at general meeting of a company. Section 277, subsection 2. State that upon receipt of special notice of such an intended resolution, the company shall immediately send a copy of the notice to the auditor proposed to be removed and the registrar.
Part A. A professional accountant shall comply with the following fundamental principle. Section 110 Integrity, Section 120 Objectivity, Section 130 Professional Competence and Due Care, Section 140 Confidentiality, Section 150 Professional Behavior. Section 110 Integrity. The principle of integrity imposes an obligation on all professional accountants to be straightforward and honest in all professional and business relationships. Integrity also implies fair dealing and truthfulness. Section 120 Objectivity imposes an obligation on all professional accountants not to compromise their professional or business judgment because of bias, conflict of interest, or the undue influence of others. Section 130 Professional Competence and Due Care imposes the following obligations on professional accountants. Subsection 130 Subsection A to maintain professional knowledge and skill at the level required to ensure that clients or employers to receive competent professional service, and Section 130 Subsection B to act diligently in accordance with applicable technical and professional standards when providing professional services. Section 140 Confidentiality imposes an obligation on all professional accountants to refrain from disclosing outside the firm or employing organization confidential information acquired as a result of professional and business relationships without proper and specific authority, or unless there is a legal or professional right or duty to disclose, and using confidential information acquired as a result of professional and business relationships to their personal advantage or the advantage of third parties. Section 150 Professional Behavior imposes an obligation on professional accountants to comply with relevant laws and regulations in addition to these bylaws and avoid any action that the professional accountant knows or should know may discredit the profession. This includes actions that a reasonable and informed third party, weighing all the specific effects and circumstances available to the professional accountant at that time, would be likely to conclude adversely affects the good reputations of the profession. Section 150 Subsection 2. In advertising, marketing, or promoting themselves and their work, professional accountants shall not bring the profession into disrepute and shall ensure that such advertisement, marketing, or promotional material is professionally dignified and in good taste and carried out in accordance with the relevant legislation where applicable. Section 100 Subsection 8. Threats may be created by a broad range of relationships and circumstances. When a relationship or circumstances create a threat, such threat could compromise or could be perceived to compromise. A professional accountant complies with the fundamental principles. A circumstance or relationship may create more than one threat. Threats fall into one or more of the following categories: self-interest threat, self-review threat, advocacy threat, familiarity threat, intimidation threat. Self-interest threat. The threat that a financial or other interest will inappropriately influence their professional accountant judgment or behavior. Self-review threat. The threat that a professional accountant will not appropriately evaluate the result of a previous judgment made or service performed by the professional accountant or by another individual within the professional accountant's firm or employing organization, on which the accountant will rely when forming a judgment as part of providing a current service. Familiarity threat. The threat that due to a long or close relationship, with a client or employer, a professional accountant will be too sympathetic to their interests or too accepting of their work. Intimidation threat. The threat that a professional accountant will be deterred from acting objectively because of actual or perceived pressures, including attempts to exercise undue influence over the professional accountant. Part B and C respectively explain how these categories of threats may be created for professional accountants in public practice or professional accountants in business respectively. Professional accountants in public practice may also find Part C relevant to their particular circumstances. Section 290 Independence, Audit and Review Engagement. This section addresses the independence requirements for audit engagements and review engagement, which are assurance engagement in which a professional accountant in public practice expresses a conclusion on financial statements. Such engagement comprise audit and review engagement to report on a complete set of financial statements and a single financial statement. Independence requires for assurance engagement that are not audit or review engagement are addressed in Section 291. Section 500 Method of Practice. A member in public practice should not use a trade or association name or any other impersonal or fictitious names under which to practice the profession. The term trade or association name means a business name that is not a personal name or a composite of personal names. Section 240. Fees and other types of remuneration fees. When entering into negotiations regarding professional services, a professional accountant in public practice may quote whatever fee is deemed appropriate. The fact that one professional accountant in public practice may quote a fee lower than another is not in itself unethical. Nevertheless, there may be threats to compliance with the fundamental principles arising from the level of fees quoted. Section 240. Referral fees or commissions. In certain circumstances, a professional accountant in public practice may receive a referral fee or commission relating to a client. For example, where the professional accountant in public practice does not provide the specific service required, a fee may be received for referring a continuing client to another professional accountant in public practice or other expert.